Hello and a warm welcome to you and your money. I'm Bryan. This evening we're focusing on the investments. It's quite amazing how markets in the last month focused on the US elections and then last week on NVIDIA's results. And joining me this evening from the Zoom room in Cape Town is my colleague Henry Middlecombe. He's an investment analyst from Anchor Capital. Henry, good evening to you and good to have you on the show.
Thanks, Bryan.
Yeah. Henry, why is the overall market so heavily focused on the results of a single company named NVIDIA? Has this one company now become the benchmark for global market performance?
Well, good Lord. I mean, it's grown into around 6% of the S&P 500, and it has kind of become the bellwether stock for the US growth story over the last couple of years, I guess. And it's just, I think, such a great kind of example of the type of market that we're in, where the company failed to meet the most lofty expectations or analyst expectations, and the share was down, on the back of what was a tremendous set of results. So it's just showing you that things are really priced for perfection at the moment, and even with a really strong set of results, if you don't meet even the top end of those expectations, your share price will come off.
I'm going to jump now. I don't want my studio to just stay where we are, but I'm going to jump to an email that I got from Leon in Hout Bay, and he says, as a director of several companies, my co-director and I always take time to celebrate with our CEO when we deliver strong results. Why is it then that analysts in the USA often demand more, punishing shares even when a company's performance is objectively solid? And that's the same with NVIDIA and many of the other companies that reported in the last quarter. Good results, but disappointed the street.
Yeah, well, like I was saying to you earlier, welcome to our world, right? That's the very definition of capital markets. So it's never about absolute good and absolute bad. It's always good or bad relative to expectations. And that's really what moves markets. And it's what you and I have been talking about for a couple of months now. When expectations are lofty, the tendency for companies to disappoint is higher. And that's why I'm saying to you, with the market where it's at now, trading on a forward 22 or 23 multiple, there's very, very little room for disappointment.
So Henry, the way I always look at markets are when good news comes up and markets go up. And when bad news at that same time comes out, markets don't adjust. However, when good news comes out and markets readjust, particularly if the street's disappointed, and when bad news comes out, markets tend to fall. That's what I always have seen as the difference between a bull and a bear market. So is the market twined with both bull and bear?
Yeah, well, look, I mean, bad news can cause the market to rally if it's not as bad as people expected. Conversely, good news can cause the market to fall if it's not as good as expected. So again, going back to baselines, if we look at history, this is an expensive market. We're in a very bullish environment. And it doesn't matter where you look, you can see confirmation of that. So you can look at the valuation of the equity market, but let's look at something like Bitcoin, which is almost at $100,000. This is a risk-on environment. The US 10-year has gone from 3.6% to a yield on the US 10-year has gone from 3.6% to 4.4% in a very short space of time. So everything's pointing to growth and inflation. And as I said, there's very little room for disappointment.
Yeah. So then, Henry, let's look at markets' concerns over potential futures, particularly under Trump and the potential for rising inflation. I mean, if he does impose tariffs, that could cost a lot more for individuals. That will certainly be passed on to the consumer. And the concerns there that maybe interest rates won't fall at the same level as it was expected or commentators felt would happen 2 to 3 months ago. I mean, we've had a 0.75% drop in the USA. I'm going to talk a little bit later about the 0.5% we've had a drop in South Africa. But, as you say, the Treasury yields are well above 4%. You mentioned 4%. Do you believe the South African Minister of Finance will have the scope to implement deep interest rate cuts to effectively stimulate the South African economy?
No, so certainly he has reduced scope now. If the Fed cuts, that gives our Reserve Bank a little bit of breathing room. But of course, the bond market's telling you that the Fed probably has far less scope to cut now, in which case we have far less scope to cut. Our Reserve Bank has to protect our currency. Rapid depreciation or weakness of the rand can drive inflation too. And so if the rates are high in the US, the Reserve Bank here needs to keep rates high to make sure that our currency's value is protected against the dollar.
Henry, is that something new when you talk about protecting the rand? I thought it's all about inflation, and our inflation figures are down. Now you bring in, and maybe I've heard this before, that it's also there to protect the rand, and we've got to be careful. I mean, I was very disappointed, I can tell you, and I can share with you. I mean, if you look at the two-pot system that came in September, and many of our viewers have heard me mention it, 35 billion has been drawn. 7 to 8 billion in taxes paid, which is absolutely ludicrous why people are drawing money from the two-pot system with a maximum of 30,000 rand and paying tax. But these are people who can put bread on the table, they're working, and they are struggling, and the majority of working South Africans have a bond on their home and also need finance to finance a motor car, and they're not reducing rates. I mean, I really don't believe that our Reserve Bank understands actually what's going on to the man in the streets. What is your view on this?
Yeah, look, so, rate cuts are very difficult to undo once they're done. And you've just explained why being the governor of the Reserve Bank is a very difficult job. There's no silver bullet in any of these scenarios, and you're trying to balance growth with inflation. It's a delicate balancing act. Not just in South Africa, but globally. And that's why Reserve Banks get it wrong so often. But I always quote Kuben Naidu when he was at the Reserve Bank. He always said, guys, what you need to understand is we import a lot of inflation as a country. So if there's a rapid devaluation in the rand, we then import so much more inflation, and that impacts growth negatively. So by defending the rand, the Reserve Bank's actually defending growth, even though as a consumer on the ground, it might feel like you aren't getting the respite that you so terribly need. But again, that's a function of our economy, and we can debate the various reasons why we're not in a great place there. But that's the reason why they're between a rock and a hard place, or between the wall and the wallpaper, as my good friend Adrian Defay would say.
Henry, I hope you got your crystal ball there, because I want to ask you, there doesn't appear to be the same sort of excitement this last Friday with Black Friday as there has been in previous years. So my question to you, if we hear news that the turnovers and shopping levels were down, how is that going to impact on the mentality of understanding where the economy is going?
Yeah, so I mean, that's I think a fantastic example of the type of data that we should be watching, Bryan. And anyone who's watching markets closely will tell you that right now it's all about the macro data. So we're going to be watching things like inflation, like unemployment data, like retail sales, like purchasing managers indices. All of these things, ultimately form a picture. And the trajectory of the market is going to be contingent on how that picture looks over the next 6 to 12 months. If you listen to the political commentators in the US, they're saying, look, there's a lot of policy change waiting in the wings, whether we're talking about tariffs or anything else. But that's going to take 12 months to play out. So we're almost in like this twilight zone over the next 12 months where there isn't much that will happen practically on the ground in terms of policy change. There'll be a lot of rhetoric, of course, but really what we're going to be following now is the macro data. What does the pulse of the US economy look like?
Henry, how dependent on this year's price movements is on the success of the GNU? And with the GNU's current appears instability, does this pose a risk to the South African markets?
Absolutely. If you look at what happened post-June, we had a nice rally in the, the South African portion of the JSE. In other words, the businesses that are really dependent on the health of the South African economy. Look at our banks, for example. First Rand was trading at, call it 60 Rand going into the election, and post-election you could have sold it in the 80s. So we've enjoyed that rally, where sentiment was very poor, and it improved dramatically with the announcement of the GNU. So of course, yes, I would say the JSE's relative health is contingent on the continued health of the GNU. I would agree with that.
And then Henry, you talk about the banks. You talk about banks having a good run. Are they fairly valued at this price?
Yeah, before they were cheap. Before you were paying, you could buy some banks on a PE of 5 or a dividend yield of close to 10. That's over now. I think they're far closer to fair value than they were. So it's not the obvious trade that it was.
Yeah.
They're certainly not expensive.
And then, Henry, let's talk about the Rand. I can't help thinking about it because 6 weeks ago, when the Rand on that Friday was 17.04, I was convinced that it would break 16. It now didn't break 16. It's back up to 18 Rand. And now, where do you think? I mean, I know we've been talking for a long time that the fair value of the Rand could be 16.20, 16.50. Your comments now about the Rand?
So predicting the Rand versus a currency like the dollar is the same as predicting where rates are going in the US. So for now, we've had a rally in rates. It's not surprising to me that we've had a pullback in the Rand against the dollar. So let's paint out a scenario. If things do start to worsen in the US, bond yields compress again, and the Fed has scope to cut again, then we'd probably see strength in the Rand again. However, if we see a continuation of what's playing out now, where inflation looks like it's on the rise, the Fed probably has reduced scope to cut, well, then probably the Rand is going to hover at this level for a while.
Henry,
but I'll always say, at this level, the Rand is comparatively cheap. So let that guide your decision making.
Yeah, Henry, we're going to take a break now. But before we do, I'd just like you to think about investing in South African markets, bringing funds back from offshore. I know we felt at one stage the South African market very undervalued. So let's chat about it when I return. Stay tuned. We'll be back shortly.